the price of silver at the current time does not reflect how tight the market is. I really believe somebody's short at that level or near that level, and they have to defend it until they can unwind their positions.
Please join us for our next live stream Sunday, July 18th at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be Sunday, July 18th, 9 p.m. Eastern. See you then. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. As always, if you are new to our channel or if you haven't already done so, please do subscribe, hit the bell to be notified of new updates, and give us a thumbs up if this interview did something for you. David Morgan joins us once again today. David is a widely recognized analyst in the precious metals industry and consults for hedge funds, high net worth individuals, mining companies, depositories, and bullion dealers. He is the publisher of the Morgan Report, a world-class publication designed to build and secure wealth, and he is also the author of the Silver Manifesto and featured speaker at investment conferences worldwide. We're delighted to have David join us once again today. It's time to saddle up and silver up for the silver guru, David Morgan. David, welcome back to SBTV. How are you doing?
I'm doing well, Patrick. Thanks for having me.
Glad to have you back on. You know, David, the Fed is talking taper once again, and we are seeing more news reports about a quickening U.S. recovery, and one metric among others being cited as lending to a belief of a recovery are recent jobs reports, which were some 800,000 plus jobs that were created. Is the economy recovering in your opinion, or has it ever really recovered from 2008?
It hasn't really recovered from 2008. If it had recovered, we wouldn't need all this stimulus, all this funny money that's being printed. I mean, part of the GDP that they tout and say, look at the GDP, it's growing, we're coming back and all that, is really getting, return of, $1 on every three that they're inflating. I mean, I don't know the exact ratio, and there's different metrics. I've read them. But the idea is you can print yourself out of this mess. You can't. So we really haven't recovered. And the way statistics are used, I mean, I forget the exact expression, but the idea is that you can use statistics to show almost any outcome that you wish. So no, we haven't. Is it better than it was the illness outbreak? I'd say, or a few months into the illness. Yeah, it probably is better than there. But in the interim, how many small businesses are out of business permanently? How many restaurants have closed down permanently? And everything else. So no, we haven't recovered.
Yeah, we'll touch on that in just a bit. But all these jobs being created, in your opinion, are Americans looking to snatch up these jobs?
No, because when you're paid more to do nothing than you are to work, you're gonna stay on your backside, and that's what's happened in several cases across the board. No, but generally speaking, there's a lot more of that than most people recognize.
Okay, so I mean, what do you think the U.S. government, or perhaps this could be any government in the world, what do you think they're going to do to essentially influence these people to go back to work after they've told them to stay home or forced them to stay home for a year?
I don't think they are, Patrick. I think it's a precursor to the UBI, Universal Basic Income. And I think they're softening up the populace with the idea that you really don't have to work for a living. You can just sit there and we'll give you a basic income for doing nothing. And that's my take. You asked me my opinion. It's a strong one. I believe that's what they're doing. You may see fits and spurts, and then they start some kind of infrastructure program and have all kinds of government jobs and all that. But on aggregate, in the bigger picture, it's going to be UBI. I'm almost certain.
Okay, that leads me to this next question. It's a question that I asked last week's interview, Ted Oakley. I asked him, can the U.S. tool up and fire up the mills and factories and farms to compete in the world in manufacturing and production, and even attract foreign direct investment with the promise of growth and ingenuity as it once did, or have those days passed?
Well, that's a tough one to answer. First of all, it's a yes, no answer. What do I mean? It's dependent on energy. So how much, oil do we have to bring it back up to, let's say, full steam? And I don't know the answer exactly, but I would surmise that my study on the oil sector, which isn't vast, but it's fairly deep, would be yes, you could do it for a while. But there's got to be incentive to do it. And, when you're getting paid to not grow crops more than you are to grow a crop, I mean, I'm pretty ambitious, but I don't think I even would grow a crop when I can make more money by not growing a crop. And that's a certain situation. It's not the question you asked, but I think it needs to be addressed. So back to what you really asked. Yes, but there has to be like free market competition whereby firing up those factories, firing up those farms, getting things going full steam ahead requires the profit motive. That's how capitalism works, right or wrong. That's the system we have, and that's the metrics that we need to obey until further notice. But that's not what we have anymore. We have, as I said, UBI. So you kind of have like UBI for farmers. If you don't grow this crop, we're going to pay you more than if you do grow this crop. So I do think it could. Will it? No. Should it? Yeah, you can make up your own mind on the should question. It's disheartening to me to see how much of our labor force has been shipped overseas due to lower costs in labor. I mean, that's what it's all about. I mean, Ford Motor and some of these conglomerates in the auto industry didn't move offshore because they love America. They moved offshore for the profit motive.
Yeah, I agree. It's pretty disheartening for me as well. Moving to the Fed, part of that taper talk, as mentioned, is the Fed dialing down on the at least 120 billion per month bond purchases. And last time around, we saw this famous taper tantrum where the markets and investors were spooked. How do you think the markets and investors will react this time when they know that cheap, easy, plentiful money would be winding down?
Yes, they say they will. It remains to be determined. What do I think? I think it'll be similar to the last time. They might be able to get away with it for a while. I mean, there is a lot of solvency in the banking sector because these big balance sheets are not being loaned into the main street for the most part. They're basically on the balance sheets and they're getting, interest, free interest for very low risk. However, this taper down that they're talking about may have an effect. It did last time. I think it will again. I don't think it'll be as dramatic this time. It
Okay,
could be. I really don't know. It's the best answer I'll give you. So I'm not sure.
sure, I'll take it. The Is this taper and the potential rise of interest rates a sign that the Fed sees inflation heating up and perhaps it may not be so transitory?
Yes. Yes. I mean, they're masters at rhetoric. They're masters of being reactionary. They don't really look ahead. They say they do. They look at the data, as Yellen used to say when she was the head. It's data driven. Well, data is always a month or two or three behind. And so you're making decisions based on older data. You should be looking ahead, which they don't. So I do think they're in massive trouble. They are looking at the metaphor of the Wizard of Oz when Dorothy or Toto goes and exposes the wizard behind the curtain. The curtain's been pulled back, and most people that are financially savvy see this and know what's going on. And really, as Richard Russell used to say, it's a point now where it's inflate or die. And not to say that we couldn't see some deflation, we probably could, even with an expanding money supply, because believe it or not, and I think most do, it's velocity of money. I mean, if you print up $4 or $5 trillion and it sits in a safe somewhere and doesn't enter the economy, it doesn't mean that money hasn't been put into the system. It just hasn't gone anywhere. So it's as if it doesn't exist. But once it starts to move, now you have it. So, and I really think, and this is my take, I think maybe Robert Prechter would agree, but I haven't talked to Bob in a long time. I think it's more of a socioeconomic situation, meaning it's more of a mindset. So when you are getting higher and higher prices at the grocery store, that's inflation to the average person. Now, they don't know about tapering. They don't know about the rhetoric the Fed's saying. They don't know any of that stuff. All they know is food costs more. So that's a mindset that's hard to shake off and say it's transitory because food doesn't change. And gasoline, let's say it continues to go. I know there's been a pullback in oil here recently. But so there's that part of it. I mean, a lot of your economists are econometrics. They look at all the data, they got their numbers, their math quants, they're really good at it. The models worked really well. But I'll take them back to long-term capital management and the $1 trillion bet, which was a PBS documentary. You can predict behavior with econometrics most of the time, but not all the time. And that's my viewpoint, because I'm very studied in, let's say, the social side of monetary collapses. And that isn't really accounted for in a lot of these, really smart people.
Moving on to silver, we are still seeing dealers not yet up to having normal inventory levels, especially with silver. And normal inventories, of course, meaning pre-pandemic levels. David, are you hearing anything from miners saying that there is a shortage?
No, not for the mining industry. I mean, the COVID did impact all mining activity, and particularly some countries more than others, Peru being an example. And of course, it did affect Mexico as well. But no, I really don't think there's a silver shortage yet. I mean, the silver market is a derivatives market. I mean, it's really a paper market. Is there physical commercial bars on the COMEX? Of course there are. But all bars don't travel through the COMEX. I mean, a lot of silver that's used, especially in industry and even at the higher dealer inventory level, comes direct from the refiner to the user. It never touches the COMEX. And that's the vast majority of it. I mean, if you look at 850 million ounces a year mined, and you look at what the inventory is on the COMEX, you're going to see that they don't match. You've got 100 million ounces, rough number, in the registered categories, which all the dealers own. They might have a little bit of eligible, but generally speaking, they don't. And then you've got all that silver that's produced every year. So where does it go? Well, it goes to industrial users and investors. And so it doesn't, of course, the COMEX is extremely important. I'm not trying to state that it isn't. What I'm trying to convey is that silver is a derivatives market, and they have just enough silver, or maybe a little more, that they require to make good on the deliveries that they choose to deliver upon.
Okay, yeah, I'll touch on that also in just a bit. But David, in layman's terms, I'm hoping you can help us out here. In layman's terms, who is the first in line to buy silver from the mines?
Whoa, that's a good question, Patrick. Well, it depends on the mine. I mean, if you go to Avino, I think it's Samsung has a contract with them directly, so they get it. I mean, they are, forward thinkers, and they realize that silver is not only precious, but their whole business depends upon it. So they are, in line to get the first silver coming out of Avino. How many more there are like that, I'm really not sure. But if you go back in time and take a quick look, you'll look at the Silver Users Association, and that's a consortium of users. And can't even read the list anymore because it changed. In the old days, Tiffany and Kodak. Kodak's really not in there anymore, but you've got, Dow Chemical, DuPont, maybe Samsung, I don't know. But a lot of the big silver users that require silver for their products are part of that. Now that's sort of faded away. I think it still exists. I just think they've more or less gone underground, and I don't even think they have a website anymore. I've looked for it and I can't find it. But so there's that. Is it as strong and robust as it once was going back a decade or two? I don't think so. But it's a one-off answer, Patrick. I can't give you a blanket answer. In some cases, it's direct to the user. In other cases, it goes to, stack up in the London market or stack up in the COMEX market. I don't know what the percentages are, but based on just thinking about it while we're talking, I would say probably about half goes directly to some type of user, jewelry manufacturer, silverware manufacturer, some investments probably direct, and then your users across the board. A lot of it goes to, let's say, re-refined or produced, maybe is a better word, where they take the block silver and they make mesh, shot, wire, nanowire, plate, all kinds of that silver commodity. They reform it into what's required for industrial purposes. So a lot of it goes through that part of the chain that most people don't even think about. But when, they get their cell phone or whatever, the silver that's in that is maybe powdered silver that was manufactured from one of these, let's say, middlemen that's required to put it in a form that a company needs in order to produce the end product. So a lot of silver goes from, commercial form into a myriad of different forms, shapes, sizes, etc., to go into the industrial community. So that's your answer.
Okay, yeah, no, that's a great answer because I wanted to share this what happened or what I've heard about, and the reason why I asked the question prior was because I heard a story where a popular refiner buys some of their silver from a bullion bank. And for whatever reason, that bullion bank could not or did not want to sell that silver to the refiner. And that refiner, I imagine, would have to go ahead and buy the physical silver elsewhere. So is this something we have to factor in? But I think a lot of times we don't factor in where in the equation, there are bullion banks or even governments or state actors with the deepest of pockets that could potentially be buying up silver at the source, leaving less for investors.
Yeah, absolutely. And, this is a bit conjecture on my part. I mean, I'm certainly well studied in the silver market, but I've never claimed to know absolutely everything. But to me, that's a sign of some disruption in the market. I don't want to overplay that card, but this means that the normal sequence of events has been changed because why? Well, I can't source it in a normal time frame. I remember when the Mint started the Silver Eagle program in 1986 because there's all this silver laying around in the government's warehouses called for the strategic stockpile. And some senator said, the bill passed and it's fine. I'm not against the Silver Eagle. In fact, I'm very happy about it. And they passed a law saying you could only source silver domestically. And that stood on the books until they couldn't source enough silver domestically just to make the Eagles. So they changed the law and said, we could source silver from anywhere to make the Eagle program, right? So this is an example of what you're saying, and that's been going on for a long time. And I think it's getting tighter and tighter. I've said it on every interview I've done probably the last 3 months. The price of silver at the current time does not reflect how tight the market is.
Why is $28 silver, spot silver, such a hard line to hold?
I don't know, but I've got an educated guess. I really believe somebody's short at that level or near that level, and they have to defend it until they can unwind their positions. That's as simple as I can make it. Am I right or wrong? I cannot prove it, but boy, I've never can recall where they've defended, that line in the sand, so to speak, so with such vigor. I mean, even when the CFTC interim, I think, chairman said we got to tamp down the silver market. I think those were his exact words, something at least similar to that. Are you kidding me? I mean, that's supposed to be that derivatives market as poorly as it's executed, as poorly as it's run, in my opinion, because there's a lot of things that go on there. You wouldn't want to be an official making a statement like that, in my strong opinion. I mean, this almost guarantees to the general public that something isn't right in the silver market.
Yeah, I know when you said that, a lot of guys jumped all over it. But David, you have been in the silver space for quite a while, and of course, you're known as the silver guru. And in your years in the silver space, have you ever seen premiums on physical and spot prices in on silver, of course, in such disparity?
Yes, during the 2008 financial crisis, when silver hit the $9 level, or actually slightly under that, silver was selling on the retail side for up to 13. I mean, if you went to eBay, which isn't, in my view, the best place to buy silver, but and eBay wasn't the only place. There was a huge premium, but it didn't last very long. It was a few months. And I wrote an article and did a couple of interviews saying that, there's an arbitrage available now, but to watch out, it's going to shrink. Most markets are pretty efficient. Silver is no exception. It is a market. And so the premiums came down, and a lot of people thought, no, that the silver price or derivatives price would go up because the premium is on the retail side were so high, and that's not how it works generally. So this time it's different. and the reason it's different, and I don't know how long it's going to be different, is it just keeps going on and on and on. It's not just a couple month event. It continues. Now I do know that the premiums are starting to back off somewhat, and I have, I'm pretty in tune with the market, as you know, Patrick, and from my sources, which are pretty good, the retail side starting to fall back somewhat, meaning that there's not as much buying by your average person that's a silver stacker. However, the big players have not backed down at this point in time. So if you go back, and I'll build on that statement, last year, when Scott Maynard made the statement about silver being his best investment choice for 2020, and about over 500 million ounces were put in an investment, 200 million rough number in the retail, and over 300 million in the ETFs or ETPs. That was substantial. And we're on track for something similar right now. We're halfway through the year. So I think there's a lot to be said about the big money moving into silver, not to discount the retail investor. That's as important really as any. It's in the investment side is what drives the market. And so the more investors we have, whether they're retail or institutional, they both play a part.
Yeah, I agree. I think Scott said that at Davos, I think is where he said it. Um, but I can concur. What you're saying is pretty much what's happening over here in Asia, in Singapore at least, anyway. So it's global. It's all the way around the world. But if you are in the market to buy physical silver, are you waiting for another silver sledgehammering where prices move down, or do you buy physical silver if you can get it despite the premium?
Well, I do both. I've been in what used to be called the Silver Saver program. It's now called OwnX. It's on my blog on the right-hand side if you're interested. You buy a portion of a commercial bar, and then at basically near spot, and then when you cash out, you have to pay the premium. So if you're buying silver, you could take the bar, by the way. So if you had enough money that you bought the bar for, we'll call it 28,000, you could ship that bar, and it would be very close to spot. However, most people don't do that, so they cash out after they have 100 ounces, 200 ounces, whatever, and then they pay a premium, and they get a choice of, Eagle would be a high premium, a silver round would be a lower premium, a 100-ounce bar would be still lower premium, kilo bar maybe slightly higher premium than a 100-ounce bar. So you pay the premium at the price of withdrawal based on what refined product you want, and it's a pretty good program. So I do buy it nonstop every month. On the other hand, my bigger purchases, I do try to time the market. When we got that big sell off to $12, I bought it the day before it hit 12 and made a pretty substantial purchase. And then the next day it dropped another, I forget, dollar or two even. And I called my dealer and asked him how much did I did I miss out on? And he said about 50 cents. So even though the paper price, which I could have gone in the futures market and taken delivery, I didn't want to bother. So I didn't really, in reality, lose that much, because even though the paper price had changed dramatically, the physical market hadn't moved that much.
David, any final thoughts that you'd like to express to our viewers?
Pat, the back of you and what you do and the silver bullion. And in fact, why don't you tell us a little bit about the warehouse you're building? Aren't you building a huge warehouse over there?
Yeah, it's a 15,000 ton vault. I believe it may be the biggest silver vault in the world, not knowing what there is in China, of course. It's near the airport, so that's it makes it a pretty good facility. And I believe it's about 6 stories higher, so it's huge. It's huge, but that's how much we believe in silver, in gold, and precious metals, and we just really want to have that facility for people to know that they can go to if they would like to have the jurisdiction of Singapore, which is in their favor, and if they would like to have a safe, secure place where what they buy is what they own. They truly own it.
Yeah, the reason I bring it up is because it is so vast. So there is the possibility that people that have silver in other locations that may be in an unallocated position may want to move into an allocated position and store it with you guys or wherever. But that's a lot of capacity, and there's a lot of question marks in some arenas regarding what's real and what isn't real. And when you stack it at your facility, I think you're pretty well assured it's really there. So I just wanted to voice that. I'll thank you again for your time and supporting me and my work. If you're interested in learning more, just go to themorganreport.com, get on our free email list, please. Share with those that you care about. I usually don't say subscribe and that stuff, but it doesn't hurt to pass the word. We're entering some very tenuous times, to put in polite terms, and most people will be better off just buying more groceries than anything else. But in this community, most people listening to your show have savings and they need to protect it. Doesn't mean you put everything in the silver and gold, but if you don't have silver and gold, you're going to wish you had. So I'll leave it on that note. Patrick, I've got to run, but I really appreciate your time and always enjoyed the interviews.
All right, David, we appreciate your time as well. Then we will let you go. Thanks again, and hopefully you can do it again soon.
Thank you, Patrick.
That was David Morgan sharing his views on the markets and the economy. For more of his insights, please visit themorganreport.com. If you like this video, please give it a thumbs up and subscribe to the SBTV channel. Audio versions can be found on SBTV iTunes or SBTV Spotify.